Welcome to How-To with Howco, the podcast that connects you with Howco team members who share their time-tested insights and knowledge covering all aspects of the car wash industry. Since 1969, Howco has helped thousands of car washers get started and succeed in the industry through Howco's planning, development, and operational services. I'm your podcast host, Bruce Hensley. In this episode, Howco Chief Financial Officer Brian Davis will share his insight and experience on multiple financial aspects of the car wash industry. Welcome, Brian.
Hi, thank you, Bruce.
Is it possible to add working capital into a loan after you've got the land and the building or the new equipment or whatever it is that you've got? Can you pad it a little bit for a safety net, if you will?
Typically, you will want to do that because you're either going to have that working capital as part of the loan, or you're going to have to show your financing partner that you have working capital to support a slow period of time. So the answer is yes. So typically, you will want to bundle some working capital in there, and you can do that in an SBA loan. You can do that in a traditional financing loan. It doesn't matter on that, but it does depend on how much what's your collateral look like. And there's still those ratios. I have to have so much collateral versus how much loan I'm willing to give. So there's still some ratios that you run into that we would have to look at, and it could help you kind of understand that deeper. But the answer is yes, we can bundle working capital into most financings in some form or fashion.
How helpful can Howco be to get me in front of the right people if I'm striking out on my own?
So we have partners that we've worked with for multiple years, folks that are well-known in the industry. They understand the car wash industry, which is a major help. I mean, what happens is you have each bank, and even if it's an SBA loan, people think about SBA loans, for example, and being a government-backed loan, and they think if they go to bank A, B, C, or D, it's all the same formula, it's all the same underwriting. That is not actually true. So I can go to bank A and bank C and bank D and get 4 different answers for each loan. So it's important that the bank and financing source that you go to understands the business and the business model. And fortunately, with our years of experience, we are well connected with multiple financing institutions that can help you do that and connect you with the right folks for that.
So what are the 3 or 4 things I need to keep in mind when I start looking to finance a car wash?
I think number one is you want to really think about which pathway best suits your personal risk appetite from a loan perspective. So traditional loans and SBA loans they have 2 very different paths of the way that the banks look at that, right? So with the SBA loan being a government-backed loan, there are more stringent underwriting guidelines, and one of the biggest things in my experience that give, I think, folks a little heartache and a lot of heartburn as they think about what do I want to do on an SBA, if they want to do an SBA loan, is the fact that they have to give personal guarantees for that. And when we talk about SBA personal guarantees, they are more times than not more expansive than what you may see at a traditional banking level. If you're a brand new car wash, more than likely, unless you have some other successful ventures with that bank that they can look at a little differently, you're going to have to give a personal guarantee. But it's just a personal guarantee that you sign on a piece of paper. Typically with an SBA loan, that personal guarantee means that the SBA will go ahead and if you, for example, have no mortgage on your home, they're going to put a first lien rights on your home. If you have a first mortgage, they're going to come back and they're going to put a second lien on that, behind that. So they're going to protect themselves with assets that have value from an SBA perspective. And that's typically when you get into SBA loans. Lenders can help you navigate that, especially with folks who have been through that many, many times. But that's a key question to think about is, am I willing to give a personal guarantee? And how deep am I willing for that personal guarantee to look and be? So I think that's number one. I think second, maybe even the first question you want to ask yourself is this investment going to be a passive investment, or am I going to be an active participant in this investment? And what I mean by that is, from a passive perspective, that means I'm going to build a wash, maybe hire a manager, and I'm going to be primarily hands-off. I'm looking for that to be an income generator for me. I can still go do my day job, but I have a second business over here that I'm running kind of part-time or passively. I'm not actively on site every day. The other option is I'm an active participant, and I'm on site every day running that wash, making sure chemicals are refilled, machines are running, all those kind of things that happen on a daily basis. So I think you have to decide how much effort you want to put into that from a manual perspective on day one.
If an operator or a would-be operator can finance this himself or cut a check, is that advisable?
That's a great question. When you can do that, then you can lower your loan to values low enough where personal guarantees and all those kind of things are no longer needed. And my advice would be you can do a 50% loan to value. You could put 50% into the business. Most banks or whomever aren't going to require you to do a personal guarantee for that because they feel enough safety if things went wrong that they could still recoup their loan. So, yes, I do think it's great to put that money in. Would I advise doing 100%? Probably not from just a use of money perspective because you can maybe do something else with that. Buy a boat, go fishing, do whatever.
Are there tax benefits to having a loan?
There are. So your interest is deductible, and so that's a major benefit for that. Loan fees that you pay are tax deductible. So yes.
Very popular subject, but what is the failure rate of car washes? And financially, what's usually the proverbial straw that breaks the camel's back?
I think typically when you look at failed businesses, and this is almost of any sort, not just car washes, it goes back to a question you asked about working capital. And that's where an owner or an investor failed to take into account how much money it really takes to get a car wash started and have enough cushion that, you know what, I thought I was going to be at 20,000 cars in 2 months. Well, weather can be a big issue. There's lots of different things that impact this. And if you don't have that cushion, then that's when things can get really stressful for both you, your lending partner, and whomever else, because that's typically the lack of working capital is the number one reason you see failure. Good news about a car wash is typically you're going to have real estate. If you have good advisors like we have with our Howco sales team, they're going to help you select a site that gets you gives you the best opportunity for success. And at the end of the day, that's what you need is a partner to help you do that. And I think our folks do a good job of that.
Brian, how about if a potential car wash operator doesn't have the best of credit?
Car wash operators are by nature entrepreneurs, and sometimes entrepreneurial ventures do not go as well as you like. Unfortunately, that does create challenges like it does in any other endeavor that you look for credit. Does not necessarily preclude you, but just keep in mind with underwriting requirements by the SBA or your bank partner, your traditional bank, either way with that, if you're looking at a bankruptcy or something with that within the last 2 to 3 years, it's very, very difficult for you to go to a bank or an SBA lender and get a loan. At that point, you're more into a conversation of, is the seller more – you're definitely – I would say you're pretty well out of the ability to be able to do a startup car wash, building it from the ground up. So you're probably into a situation where you're going to a seller and trying to talk a seller into giving you financing to purchase that wash. So like I say, it doesn't necessarily preclude you, but it makes it very much more difficult. If you're an existing owner, some other things happen maybe in another business. Your credit's taking some hits for whatever. You need some new equipment. Again, traditional bank, SBA lender may not be the right answer. However, there are some alternative equipment lenders that are out in the marketplace that will lend you money, typically under some type of lease, in order to go get that equipment. Now, those rates are typically higher and a few more hoops to jump through. And I would say if you are looking for equipment to be financed in that arena, to make sure you do your due diligence, because there are some non-reputable lenders that will look to take advantage of you in those situations as well. So again, it's important to be able to talk to specialists like you have at Howco, or we have here at Howco, that are able to lead you in the right direction to reputable lenders, whether it be for challenge credits or for those with A credit.
This is How-To with Howco podcast, and we look forward to you joining us for subsequent episodes that help car washers plan, develop, and operate their business. For more information or to contact a Howco representative, please visit howco.com. I'm your host, Bruce Hensley, and we'll see you again soon for another episode of How-To with Howco.